Hello, and welcome to the United States P3 unit session. We are delighted to have Mr. Sam Baydoun speaking to us live from Washington, D.C. Welcome, Sam.
Thank you, Lori.
Sam is the project development lead from the Build America Bureau. He serves as the technical assistance lead, and the Build America Bureau is part of the U.S. Department of Transportation. His responsibilities include providing technical assistance to state and local sponsors in the development of transportation infrastructure projects that would benefit from federal credit assistance under the TIFIA and other financing programs. Sam is going to be speaking to us today about this, in addition to many other interesting topics. Prior to joining the Bureau, Sam served as Bureau Chief for Innovative Project Delivery at the Illinois Department of Transportation. He was responsible for standing up the alternative delivery program, including public-private partnerships and building the capacity and the capabilities of the office. Prior to Illinois, Sam served as the acting deputy director in the Virginia's Office of Public-Private Partnerships, where he provided leadership and oversight in the procurement and delivery of P3 projects. Sam holds a master's degree in business administration, as well as certification in both project management and design build. Please help me in welcoming Sam. Sam, I'm going to hand it over to you now.
Thank you, Lori. Thank you for the wonderful introduction. I'm grateful to be here. I'm grateful for the invite, but most importantly, grateful for the opportunity to speak about P3, something that's near and dear to my heart. I've been practicing that for the last 15, 20 years. Mostly in transportation. We'll talk about this here in a minute. Let me share my presentation here real quick. Just a quick check to make sure that you can see my presentation. Excellent. So yes, Build America Bureau is an office under the Office of Secretary in the U.S. Department of Transportation. Just a sort of caveat here that I'm speaking today from experience as a practitioner and not necessarily on behalf of the government. So here again, thank you for the opportunity. Okay, so the Build America Bureau was established in 2015 by legislation to manage the credit assistance program under the TIFIA Transportation Innovative Financing and Infrastructure Act, as well as the REF, which is the Railroad Rehabilitation Infrastructure Financing, two programs that date back to 1998, but they were managed by the different modes in the Department of Transportation. So the law in 2015, the FAST Act, brought those programs under the Build America Bureau. And the Build America Bureau, therefore, is charged with managing the lending program. As you can see, for outreach activities, we have the capacity to lend, as of today, about $100 billion worth of loans to or credit assistance to public sponsors. Also, the Bureau is charged with making the lending programs are more accessible and reaching to all kinds of transportation infrastructure projects, as well as expanding the reach to large state entities, public entities, as well as small municipalities and rural communities. To do so, we provide technical assistance, where we talk a lot about best practices and lessons learned in educating the public sponsor on how to efficiently manage the resources that they have and deliver the most for the precious resources that that we get in the way of public dollars. So the technical assistance will educate about the innovative delivery, such as P3s. We call them P3s here in the U.S., but they are the same thing as PPPs. We use those terms interchangeably. But we also, for public sponsors who have projects that they are looking to finance through the federal credit assistance program, we help with the early development phases of the project to ensure that the project is developed according to best practices, and with the hope that it will have easy process and get a loan from the federal credit program. So I mentioned the two main programs that we manage at the Build America Bureau. They're loan programs, or could be they're credit programs, but it could be direct loan, or it could be loan guarantees or line of credit that will help facilitate the delivery of project. And we'll talk here in a little bit about how that happens. So the TIFIA is mainly concerned with highway, roadway transportation projects and related facilities. And we can finance the cost of the project up to 33% with the federal financing tool here as TIFIA. But by statute, we can go up to 49%, but we limited that to 33% by policy. The railroad rehabilitation and improvement financing is mainly targeted toward passenger rail and freight and commuter rail, and we can finance under the RIF up to 100% of project eligible cost. The difference between the TIFIA and the RIF, the RIF will assess a credit risk premium upfront to the project. So that's how the federal government, or the federal financing program, ensures that the project is credit worthy. So the key features in the loan programs that we have, we can finance up to 35 years. That was prior to the Bipartisan Infrastructure Law, or the commonly known the Infrastructure Investment Act. That changed it, and now we can finance up to 75 years. But there are certain nuances and certain caveats to that. The thing that's different about the federal credit program is we can allow up to 5 years deferral period. In other words, if you are building a facility that needs to ramp up operation for the first 5 years, we can defer the payments on that. Excuse me, and we can pay. I'm sorry. The project sponsor can prepay the loan without any penalty. The thing that's unique about our program is we can customize the loan and construct the financing according to the project or the borrower's need. And also there is another program, credit assistance. Federal credit program, which is the private activity bonds. This is a facility for the state or local government to issue tax-exempt bond on behalf of the private entity, and the private entity will have the responsibility for paying back the loan. So on many of the projects, particularly large projects, we have seen where in the financial structure of the deal for the project, we can see a combination of private activity bonds and TIFIA or RIF. The thing that makes the federal credit assistance program so attractive in terms of lowering the cost of the project financing is the low interest rate. So our interest rate is directly tied to the Treasury for the same maturity, and it's usually about 1 basis point above that rate. As of last week, it was about 3.17. But if you have been following the world events, the interest rate is rising rather quickly. So that changes the rate on a daily basis. I'll get the hang of this in a minute. So the type of projects that we finance with the federal credit assistance, they're mainly transportation projects that I'm concerned with and we're talking about today. Eligible projects could be roadway, bridges, transit facilities, bicycle pedestrian infrastructure, intelligent transportation system, transit-oriented development related to both the transit facility or near the transit facility, and or rail, as you can see under the RIF program. The Bipartisan Infrastructure Law also expanded the TIFIA lending authority to airports projects. So this is something new that we have not done in the past. So we're excited about the opportunity for that as well. So the eligible entities, they're mainly public entities, state, tribal, county, municipal governments. We can also lend to state infrastructure banks, and we'll talk about that in a minute in a little bit more detail. We can finance projects that are led by a public-private partnership, and the private entities are responsible for development and delivery of the project, and we can lend to that private entity as well. So the RIF is mainly focused on rail facilities, freight rail, passenger rail, transit-oriented development, and intermodal facilities. And eligible borrowers here, the railroads themselves, which in the U.S. are privately operated companies, they can qualify for credit assistance program. The Bureau, as I mentioned earlier, is charged with streamlining the loan process and making it easier for smaller entities to borrow as well. So we took a different spin on, or added more products to the RIF product, and introduced the RIF Express. This is mainly targeted for smaller entities, smaller projects, $150 million and below. The thing that makes it attractive here is the RIF program. It can help pay for the assisting the project sponsor in the advisory fees and help toward the credit risk premium. So that is a program that here again mainly target to all smaller entities, smaller projects, in hopes of help develop more of regional local projects. TIFIA Lite, similar to RIF Express, is streamlined process for smaller entities, public entities looking to deliver smaller projects that otherwise they could have a challenge delivering the project, but they could benefit from the TIFIA program. Another subproduct of the TIFIA program that's mainly targeted toward rural and tribal entities is the RPI, Rural Project Initiative. Here again, it's for smaller areas outside an urbanized area of 150,000 or more, projects between 10 and $100 million. And I mentioned earlier that TIFIA can finance up to 49%, but by policy, we limit that to 33%. Under the RPI, we lifted that policy and we can finance up to 49% the project cost. But the interesting thing here is, and which makes it very attractive for a small and rural entity, make their project more affordable, is we can lend at the half of the treasury rate. And we can provide assistance toward the borrower fees and also help assist them with the project development cost. I mentioned earlier the state infrastructure banks for smaller projects that fall below the $10 million threshold for the TIFIA and RIF programs. The TIFIA and RIF program, the TIFIA program can lend to state infrastructure banks where it's authorized by the state to have such facility. Then the Bureau will lend to the State Infrastructure Bank, and the State Infrastructure Bank will lend to smaller entities, smaller projects. There is a limit on how much a federal credit assistance or total financial assistance between credit and grants and other federal dollars been spent on the project. That's limited to 80%. And I mentioned earlier that the TIFIA limits by statute the participation in the project cost of 49%. Here, the smaller projects can borrow from the State Infrastructure Bank up to 80% and still take advantage of the same benefits of the TIFIA program. So this is a way of helping smaller projects deliver more, smaller entities deliver more of the smaller projects. So the bipartisan infrastructure law, as of November 15, 2021, expanded the authority to lend to other projects sector in the transportation infrastructure, such as transit-oriented development for both rail and transit facilities, as well as airports. And it also expanded the term of the loan up to 75 years term for the loan, therefore lowering the payment and doubling the length of the loan. This is a way more of making the project more affordable in terms of lowering the payment upfront and spreading the loan over longer period of time. I mentioned earlier as well that private activity bonds, we had the limit of $15 billion originally, and in 2021, we reached that limit, that cap. So the bipartisan infrastructure law added another $15 billion on November 15, 2021. So we can honestly say that we're back in business providing private activity bond capacity for TIFIA and RIF eligible projects. The bipartisan infrastructure law also introduced some new programs and new requirements for federal credit assistance. So we are working on developing the procedures and policies on how we're going to manage and implement some of those changes. Those policies and procedures will take some time to develop, but we are working on that right now, providing guidance for what would transit-oriented development eligibility would look like, and what some of the requirements in terms of value for money requirements, what would that look like? So we are working on developing the guidance right now and hope to provide that to the public sponsor and the private sector here in a relatively short time. I mentioned beside the Bureau programs for credit assistance under TIFIA, RIF, and PABs, we also provide technical assistance. And what that would entail is the Bureau will work with the private sector as well as the public sector on developing projects and early on. One of the main things that we concentrate on in terms of public-private partnerships is ensuring that there is transparency and accountability in the process. So the bipartisan infrastructure law required certain level of details and activities in ensuring that the projects that are being delivered as a P3 or PPP really provide the benefits, and they are done for, or the P3 delivery method is the best and most efficient way of delivering the project. So the value for money analysis is required for projects, particularly major projects, for major highway projects over $500 million. It will require two things. One, to ensure the public sponsor will conduct an early assessment of the P3 delivery. And once the project is gone off for procurement and terms are negotiated, also to do a detailed value for money based on the known terms and conditions at that point. For bigger projects, the 750 million and above, and seeking both TIFIA or RIF financing, it will require the same level of analysis. And there is specified elements that will include things like the externality benefits, and it takes into account the tax benefits and things like that, to ensure that the project is feasible as a P3, and the P3 is good delivery model for that project. This is a way of ensuring that the federal investment in the project is really producing the value and the benefit that is intended under the P3 delivery method. Also under the P3 delivery method, another requirement is after the project has been in operation for no more than 3 years within the completion operation, for the public entity, the public sector, to certify that to conduct a review, first of all, of the P3 performance or the private sector performance, and ensuring and certifying that the project is delivering on the benefit of that are intended in the value for money analysis. So this is one way to ensure that we are delivering on the benefits that we intended to get from the public investment, in particular the federal investment. Couple more programs. The Rural Tribal Assistance Program, prior to the bipartisan infrastructure law, we had a small program called Regional Infrastructure Accelerators, and we'll talk about that in a second here. But with the bipartisan infrastructure law, introduced two new programs, one aimed at rural tribal assistance. This is where we provide grants for the public sector or public sponsor and assist them in developing the project and exploring the P3 or innovative delivery opportunities. And that's about $10 million over the next 5 years. Another program that will help with the asset concession. This is where the public entity that has brownfield projects and currently operation to monetize those assets and take those funds and help build other projects. And that's a $100 million program over 5 years. So between those two programs, the Bureau will have responsibility of implementing and managing $120 million more than we had before, and introducing more new programs. One of the new programs that we stood up last year, Regional Infrastructure Accelerators, and those are regional entities that we designated in 2021, and we're working on the designation more regional infrastructure accelerators here in the next few months. Those are regional center of excellence, if you will, that will help project sponsor on developing projects in innovative ways, including the P3 and bundling projects, as well as exploring innovative opportunities. So we have designated 5. We're looking to add to that here in the coming years. We do provide training under technical assistance. We conduct workshops and webinars, and we posted training materials and tools that are available for public sponsors to use as best practices and lessons learned. We do have a course that is available and could be customizable, depending on the need of the public entity. It's free of charge. I am one of the instructors that will teach that course, where we go out and do, whether it's 1-day workshop, 2 days, or 3-day workshops. And we do that for the project sponsors. Recently here, to add to the active technical assistance capability from the federal perspective, we stood up a Build America Center, which is a center of excellence that looks more into research activities, as well as development of training material and training courses. It's in collaboration with 5 universities around the country. Stanford University, Purdue University, Maryland, Georgia Tech, and Virginia Tech. We have a regional approach to that, and we're aiming to help bring the capacity building and lessons learned, best practices closer to the project sponsors at the regional level. This is my information here. Please feel free to reach out if you have any more questions, and I can be of help. We're certainly here as a federal entity, to promote the delivery of efficient infrastructure projects and help finance such projects. I'll stop here and take any questions.
Perfect. Sam, thank you for an amazing presentation. That was definitely very informative and a lot to take in and process. And I can see that we've got a few questions. So let's start with, we've got a question here from Oscar. Do you see at Build America Bureau an advantage to having state P3 units that would promote and facilitate P3 project development?
Yes, absolutely. And that's one of our main functions here at the Bureau, is to be a resource to the public entities, in particular if they're looking at building capacity and capability. We have developed the tools, and also we have the resources that, as I mentioned earlier, will go out and work with the PPP unit at the state level to help them understand, what P3s are, and give them all the resources that they need. As a matter of fact, the bipartisan infrastructure law, the $100 million program that I mentioned earlier, part of that money is to help build the capacity at the local level or at the state level. So we're managing that program, and trying to figure out how to stand that up, and under what conditions and all that. Of course, $100 million may sound like a lot of money, but it's still
probably goes very fast.
Absolutely.
Good. Okay, so we've got another question here from Jean-Christophe. Beyond the value for money, do you also measure the externality benefits beyond tax? So what about value for future generations?
Absolutely. And this is one of the things that, when we look at the value for money, we'll look at numbers and comparing the public financing versus private financing for the project. But the bipartisan infrastructure law took that one step further to say that we have to conduct value for money analysis to include the social benefits, to include the externality of the impact of the project on society, on the environment, as well as the future generations. So it's part of the federal government saying that, yes, we will support the projects, but we want to make sure that the projects are resilient and will produce the benefits to the smaller communities, to disadvantaged communities, also provide long-term benefits under the PPP3 method.
Perfect. Thank you. Jyoti has a question for us. And so in Brazil, Bendes was lending at below treasury rates and crowding out some commercial financing. Build America is able to give loans below treasury. What implications do you see? Sorry, I can't see it. Do you see? There we go. In terms of commercial viability of the projects.
Okay. Let's keep in mind why these federal credit assistance programs were established, mainly to assist projects that are challenged in terms of finding financing and getting financing otherwise from private sector or on the commercial market. So what we look for or where we can assist are projects that are investment grade. But really, if they are at the lower end of the investment grade, the commercial market probably will charge higher rate for the project, making sometimes, increases the cost of financing the project. And as a matter of policy, the federal agency or the federal government says that we need to help those projects and deliver those projects because they couldn't be delivered otherwise. So we're not looking to crowd out the commercial market, but we are looking to help smaller projects that are challenged and they couldn't be delivered otherwise.
Makes sense. Makes sense. Thank you. Thank you, Sam. It looks like David Baxter has a question, likely in follow-up to what we were just discussing. So he's asking, what is the status of P3 readiness in state governments?
Yes, the P3, although they have been, I've been associated with P3 delivery in the States for the last 10 years at least. But it's not commonplace. It's not the first go-to delivery method,
Right.
Mainly because it's very complex process, and these are large, complex projects. And the state DOTs are familiar with the traditional delivery method, design, bid, build, or more recently venturing into the design, build, delivery methods. So there are a few states that have practiced the P3 delivery. And they do a very good job at it. Example is Virginia, Texas, Florida, and so on. But other states still hesitant. They have not ventured into that space yet. But hopefully, with the available resources and the programs that we are standing up and providing more resources to public entities, hopefully we can bring more states on board, understanding what P3 delivery method is and how they can benefit from using that delivery method.
Fantastic. Fantastic. Thank you. Oscar has another question for you. So for non-solicited proposals, can one take advantage of TIFIA and the project activity bonds?
Absolutely. The process for unsolicited proposals here in the state varies from state to state. It depends on the authorizing legislation. But if the project leads at the end of the day to a PPP agreement, and the public sponsor enter into this agreement with the private sector, yes, the private sector can take advantage of those programs under the sponsorship of the public project, and under the concession agreement from the public sponsor. So yes, the public sector can take advantage of those projects on behalf of in delivery of the project on behalf of the public sponsor.
Perfect. Wonderful. Thank you. We have another question here from David Baxter. He's asking, will the massive funding that the administration is promising for these infrastructure improvements, is that a disincentive for P3 considerations?
Very good question, David. Yes, we have, as a public entity, they more than likely they have reached their capacity on funding and financing. So when they're looking for grants are money that free of charge, right? They give it to the public sponsor, state or local municipalities, whatever the case may be, and they deliver the project. They don't have to pay the grants back. With a loan is a little bit different. That's that's money that is borrowed, and there's every expectation that they will pay it back. So if they can get money that they don't have to pay back, and they don't have to commit to a loan and get that on their loan portfolio for the next 35, 40 years, yes, it is preferable to have the free money. So yes, we have seen, we heard, and we have seen activities where have been either delayed or canceled, waiting for the federal money to come in because it's cheaper to deliver it that way.
Right. Okay. I have a question for you.
Yes.
I'll try not to make it too, but so we often talk about the value for money analysis. If you had one question that you wanted answered, throughout this Congress, or if there was something you would like to see happen with respect to the way VFM is viewed, what would that be? What would you like to
one of the things that we're hoping to get to at some point is to standardize the value for money methodology and what elements are included in that. Yes, we talk a lot about value for money. Different states, different project sponsors, different countries, they have different definitions what the value for money analysis is, and how that is determined. So one of the things that I'd like to see eventually is development of standards, whether it's across the states or across or internationally, to say these are the common practices and these are the steps to be taken to determine the value, and these are the things that need to be studied in the value for money analysis. Because at the end of the day, we have to remember that value for money analysis is decision support tool that will help the public entity making a decision on whether to proceed with the P3 delivery or PPP delivery or not, and what are the benefits, what are the long-term benefits for this arrangement. So that there has to be some kind of standardization, with the understanding that there could be some variation for what that would look like, because P3 projects are very complex and each one of them is different. We have a saying here, and I always say that if you've seen one P3 project, you've seen one P3 project. Right?
That's it. I like that saying.
Yeah, so they're not all the same. But there has to be some common elements that are the foundation of making that decision for public sponsors.
Wonderful. Thank you. Thank you. That's I think that's a fantastic recommendation, just to get everyone on the same, from a baseline perspective, right? So we're all working from the same understanding or the same definition. We have another question here from Oscar. So for transportation projects such as rail, you were discussing some of that along many states. Does BAB provide that technical assistance and coordination of those projects?
Yes, absolutely. I mean, it's a project that we support, rail projects, and here more recently, it has been in the spotlight, considering the supply chain issues. So we are working at the federal level with our ports and freight and rail partners on finding solutions for that, working on solutions. One of the things that I mentioned is the regional infrastructure accelerators, where we bring that local support to the regional entity and look into innovative projects, innovative delivery of projects. A couple of the projects that, well, more than a couple of the projects that we looked at, they are, some of them are focused on rail, both passenger and freight rail. One of them is really concentrated on the movement of goods from the ports inland. It's inland ports. That project is in California, and Sandag, San Diego, is focused more on regional freight and regional passenger movement. Another project in Seattle that we're working on is converting the fleet, the drayage fleet at the port, to clean energy, converting from fossil fuel to electric vehicles. So those are some of the things that we're working, along with to improve the freight rail movement. The instances where we have conflict between roadway and rail facility, working on the grade separation and for safety reason as well as improving the movement of goods and people. So yes, there is a great deal of focus on rail, whether it's passenger or freight rail.
Perfect. Thank you. We have a few more questions. This one in from Zied. So can you help elaborate for us what are the public sector entities that are involved in P3 and the U.S.?
Yeah, mostly, as I mentioned, mostly have been state DOTs that I've been involved with, and our credit programs will support. State DOTs that are looking to deliver highways mostly. About 80% of our loan portfolio is in the highway and bridges. We do have some support to transit and some for rail, but not as prominent as the opportunities for P3s and highways. So we do support those projects and those project sponsors. But recently we have experienced, because in the States, some municipalities, large cities like New York, Los Angeles, and others in Chicago, they have the authority to deliver their own programs and develop their own PPP3 authority. So we have been experiencing more activities in those bigger municipalities to deliver P3. They have been entering into that space. Here again, for the same reasons why the state DOTs enter into these P3 agreements. Limited resources, efficient delivery of a project, and the innovation from the private sector. A good example of that, LA Metro has about $10 billion passenger rail or transit project in LA Metro that is being contemplated as actually went to procurement as P3 and currently is under a P3 pre-development agreement. So that's very large projects at the municipality or the city level. Mm-hmm. And some state authorities, regional authorities such as the Port Authority in New York, New Jersey, they are delivering projects, large complex projects in similar way.
Perfect. Thank you. We've got 2 more minutes, but there's one question that I think is interesting here from David. He's asking, how well versed is the private sector in the United States? I know we've talked about this, so if you can give us that answer in 1 minute, that would be great.
Yeah, one of the things that we have experienced here again, like I said, these are large complex projects, and there is no really one set market for that. Different entities will look at P3s in different ways, depending on their risk tolerance and their capability of delivering innovation and their expertise in that particular sector. So what we have experienced that they're not all really approaching P3 in the same understanding, in the same manner. They all look at it in different ways. But of course, the private sector, they're looking at their bottom line profitability and ability to deliver projects, within the risk tolerance. So what we do at the Build America Bureau, and this is part of our technical assistance, and you probably have experienced that, Lori, in the recent P3 workshop that we did in San Diego. We invite the private sector as well to attend in those workshops. And here again, we don't charge the private sector to attend those workshops either. So what we have experienced is the private sector is getting more and more interested, especially at the staff level, educating their staff on what P3 delivery, what's best practices and lessons learned in P3 delivery, and how they can participate in that space and deliver good P3 projects and develop P3 projects. So the hope is when we educate them on that, along with the public sector, we get everybody on the same page, sort of looking at P3 delivery method in the same way. and hopefully we can increase the competition, deliver more projects.
Wonderful. Well, thank you, Sam. Thank you so much for sharing with us all of your experience and your insight today. It's been a pleasure having you. So on behalf of WAPP and all of our audience today, much appreciated. And I would also extend to the audience to please now join us for our Canada P3 unit session starting right now. Take care, Sam.
Thank you.